Right, here we go. Welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. So, in this show, we're going to talk to you about what's happening in the markets and how we are trading it. And today is Tuesday, April 25th, and stocks are lower right now as traders digest earnings reports. And then we also had consumer confidence and housing price data. So, we'll take a look at the markets, how the markets are reacting. And more importantly, we'll show you how are we trading these markets. By the way, if this is your first time here, I'm Markus Heitkoetter. This is my head coach, Mark Hodgson. We're real traders who trade live accounts. So therefore, we got a lot of trading experience and we're showing you how we trade these crazy markets. So trust me, we know our stuff and we're not afraid to tell you like it is. So if you're here looking for some honest insights into the fascinating world of trading, you are in the right place. And geez, Mark, I mean, these markets are a little bit all over the place. This morning, definitely heading a little bit lower.
It sure looks like it, Marcus. And we know that this week is a big week for earnings. And there were some reports today, too, that we could take a look at. But after a negative start to the day, slowly falling even more. And there you have some of the big names reporting today, a couple of reports.
Yeah, let's take a look at this. So we had Verizon reporting this morning, the ticker symbol VZ. So far, I mean, they opened lower, but right now coming back here, no real surprises here when we look at Verizon earnings, right?
I would agree. I would agree. And then we also had General Motors.
Right, General Motors right now down 2.5%, which is interesting because in terms of earnings, they beat both in terms of earnings and revenue, but slightly down. So probably something in the outlook that they said. Do you see exactly what happened there?
I didn't, and I did see a headline that they are discontinuing their Chevy Bolt. At least that's what I believe I read, which I don't think traders or investors are going to care that much about.
Yeah,
But maybe that's personal opinion.
yeah. We also had McDonald's reporting earnings, and they reported better than expected earnings. Were higher, opened with the gap up. Right now, pulling back a little bit. Seems that there's quite some volatility today in McDonald's, which is a little bit surprising.
Yeah, a real strong start, and now going negative, although coming off of session lows, trading down about a 0.5% right now.
Right, and then we also have PepsiCo. PepsiCo up and away here on stronger than expected earnings, better than expected earnings, up 2.5%, 2.3% right now.
Yeah, look at that. I believe that it's now trading at all-time highs.
Is
Yeah, it
it?
looks like yeah.
Oh my gosh, look at this. Well,
So getting through resistance back in December of last year and making new record highs, so not too bad.
yeah.
Now this week, 1/3 of the S&P 500 companies are reporting, so big week for earnings, and a interesting day with some big names.
Yeah. Now, then also today, First Republic Bank reported earnings. And this was one of the banks that was in the news when we had two banks collapsing. I mean, this is where we had, what was it, the Silicon Valley Bank and Signature Bank. Credit Suisse, slightly different story. But then this morning, we also heard from First Republic Bank that it was a very close call for them. They had lots of withdrawals, and you see that they're already down 85% for the year this morning, followed by another 27% down because it just seems that, oh my gosh, First Republic Bank on very shaky grounds here.
Exactly, and it sounds like it was worse than investors actually expected. So I think that that's part of it. They did say that the bank withdrawals or deposits have stabilized, but it dropped 40% in the first quarter, and the stock's down more than 90% for the year, down another 27% today.
Yeah. So after these earnings, we also had some economic reports that were released today. So looking at the economic calendar, we had home prices this morning, the home price index, which was interesting. I mean, coming in much higher than expected. Seems that home prices month over month rose 0.5 percentage point, and everybody expected home prices to decline because interest rates right now are above 7%. So this were, okay, what's happening here? Why are people buying homes? But we also had at 10 o'clock the new home sales that came in stronger than expected. What the heck?
Interesting, interesting. I mean, you would think that with that higher rate above 7% for a 30-year mortgage, that that would put a damper on sales, but it still seems like, at least for now, demand is there, and it could be more of a supply issue, right? That was what we saw during the pandemic. Many people expected that with a problem with the economy and people not working, that home prices would fall, but there was just more demand than supply, and that drove prices significantly higher. But definitely a surprise here. I'll give you that.
Yeah, so that's super interesting. And that's kind of also concerning because we know that when we talk about inflation, the cost for shelter, which is housing costs, are a major factor in there. So as houses are getting more expensive, and also mortgages becoming more expensive because of the higher interest rate, this means that housing costs are getting more expensive. And that's not only for home owners, it's also for renters, because as all of these costs are going higher, that's where rents will go up. So for the inflation front, that's not good news.
I would agree. I would agree. We'll have to see just how much it plays a role, but in theory, absolutely.
Yeah. However, this morning we saw that there was a little reaction to this. The bigger reaction was to the consumer confidence report that came in much worse than expected. Consumer confidence was supposed to be at 104.1, very much in line with what we saw in the previous months, but at 101.3. So consumer confidence going down. The recession is coming.
Well, I think that consumer confidence dropping is to be expected, and we talked about that during our mastermind coaching call this morning. I really believe that this isn't the real focus right now for investors, and so we were keeping an eye on things, seeing if there was a reaction. It's a red flag report. If there is a big surprise, you can see a reaction. It is a wild card, but I mean, ultimately, consumer confidence falling and people spending less would be good for the Fed, not necessarily for the economy, but good for inflation. And good for inflation eventually means it's good for the economy, right? So it's kind of like, how do you look at this? Is this a bad thing or is it a good thing? And I think that when it comes down to it, traders are really focused on individual earnings this week, and then also inflation in the Fed and Friday's report.
Right. And this is where we see, I mean, for the Fed, nothing has changed. Yesterday, the probabilities of another quarter percent hike were at 89%. Right now, a little bit lower. So it seems that as consumer confidence is going down, people think, okay, the Fed might have overshot here. But I mean, at this point, it's almost certain that the Fed will raise interest rates another quarter percentage point when they meet next week on Tuesday and Wednesday. And on Wednesday, we will know what exactly they're doing. So we're just over a week away. Next Tuesday, in exactly 1 week, the Fed meeting will start. But then on Wednesday afternoon, that's where we'll hear what the Fed thinks. And then also the all important press conference with your favorite, Jerome Powell.
Time sure flies, especially when there's a hospital stay.
Yeah, right. Okay. Well, so looking at the 5-minute chart of the S&P 500, we see that we opened lower, we're pushing lower than initially, and we watched it live with our mastermind. Initially, the reaction to the consumer confidence report was positive, but then it seems that we were sliding. Earlier, we were trading at session lows. Right now, we are coming off session lows, but we're still down significantly. I mean, the Dow holding in there with down 0.2%. The S&P down 0.6% right now as we are an hour and a half into trading, and the Nasdaq down 0.8%. So Nasdaq right now being hit the hardest.
And down significantly, I think it's all relative. If we
Yeah.
consider the year, not a big drop at all. If we look at the last week and how we've been in these narrow ranges, sure, this is a little more significant than we've seen.
Yeah. So, I mean, also looking at the VIX, I mean, earlier it spiked above 18, and I mean, spiking above 18. I mean, if you look at the daily chart, that is nothing, right? As we can see here. But right now, back below 18. So there doesn't seem to be a lot of fear. And I think that traders are really waiting on big tech this afternoon So Microsoft and Alphabet, the parent company of Google, kicking it off, and then also Visa. I mean, Visa always provides some insight into consumer spending, right? With interest rates being higher, okay, how did consumer spending on credit cards change in the first quarter, and what does Visa think? How will this impact consumer spending for the remainder of the year? I think combined with the current consumer confidence, this is another, another earnings report that could move the markets.
Yeah, and Visa, one of the top 10 companies in the U.S. So it's definitely something to consider.
All right. Let's take a look at our position and how they are doing and what's happening here. So, looking at CTRA, Coterra Energy, um, really interesting. So, let's just zoom in a little bit. So, after pushing higher yesterday, up a percentage point this morning, at first we we're going higher. Right now, giving back some of the gains yesterday, down 1.7%. So, I'm not able to sell calls against my existing position at 26. But I'm very nicely trading above my break even, which is just shy of $23. Google, super interesting. So yesterday, I was able to sell the 110 calls, and today Google kind of hanging in there. I mean, right now down 0.2%, and Google will be the big one, reporting earnings after the bell. So we will see what happens. They did have, if you look at the earnings analysis, they are coming from a losing streak where the EPS surprise, where they reported worse than expected earnings over the last 4 quarters. Can they break the streak? That is the question here.
And I like what you did the other day. So you've sold the 110 right now, trading a little under 106, and you're assigned at 108. So I think you're in a good position. I think Google's ready to, even if they don't beat, rally on earnings.
Yeah, yeah,
That's
we
what you
shall
want.
see. I mean, especially if you look at the 7 day reaction. I mean, typically to the upside, right? With an average of 7% after 7 days. So we'll see what happens there. We looked at it yesterday. If we looked at the expected move here, and if we toggle this on, we see that traders expect, or options traders are factoring in that Google could rally on earnings here to 110 by the end of the week, or drop down to 100. So we'll see. We'll definitely keep you posted of what's happening here also with my position. And then we have PNC Financial Services. And I must say, I'm pretty impressed that PNC is holding in. I mean, right now down only 0.5%, especially considering that First Republic Bank, another regional bank, it's tanking 20%. It seems that traders and investors believe, okay, that's an isolated incident to FRC, First Republic Bank, but doesn't really affect PNC.
And I think this is a good thing. Of course, PNC already reported earnings. They kicked off earnings season with JP Morgan. So that's out of the way. But I agree. If investors were really worried about the contagion and it carrying over to these smaller banks, PNC should be down more. And it actually opened negative and went positive for the session briefly, down just a little bit today. No big deal.
Yeah. We'll see. So on the scanner a little bit earlier, we had a few candidates that popped up on the scanner. One of them was Macy's. So it popped up at a strike price of 16. We decided to pass on this one, but I mean, this would be a decent trade. Don't you agree?
Yeah, I think it's decent. I like about 1650 kept popping up, and I think at 1.16 was available.
Yeah.
I'd rather get a little bit lower there strike wise, but I think it's decent.
Yeah, another one that popped up on the scanner was UPS. After missing earnings today and being down, but the strike price here is too high. We would like to really sell puts kind of at support that was recently established. So I think somewhere between 160 and 165 would be much, much better than up here at 175 where it is right now.
Yeah, and I was keeping an eye on this one, and 170 would probably, like 160, 165. Absolutely agree with you, Marcus. With where it's traded this year since December, we're kind of in like a 172.50, 195 range. But I think that 170 or lower would be where I'm comfortable, and at 175, just a little too high for me.
Yeah. There were a few more on the aggressive scanner that one of the one of the symbols that popped up is TPR that I've been trading quite a lot, and it seems that we established a range up there. So, what do you think about this one? Is this something that you would be interested trading in? Trading it at 40, selling puts at 40 after it has been trading at low as 28 here. What do you think about this one?
This is where it gets a little tricky because I prefer stronger support and long. Came back, you're thinking, I don't really want to own it at 40. I'd rather have support at 30. Then it's better to trade something else or wait.
Right. I want to take a look at one more, Suncor, because I mean this popped up yesterday already, and I think Suncor is another interesting energy stock here. Not for me because there's a high correlation to Coterra Energy (CTRA), but I mean overall, what do you think about this one? That's not too bad here. The strike price of 29.50.
I do like I do like Suncor. Uh, yeah, what's the strike again?
It's 29.50, so it's a little bit higher. It's a little bit more aggressive. This is why it popped up on the aggressive scanner. But
Yeah.
that's where it might be worth looking if maybe there's a possibility because at the 29.50 we're getting 37% annualized. So maybe at the 29 it is possible to get 30% annualized, which would meet our criteria here.
Mm-hmm. Yeah, I think that's something to watch.
Yeah, definitely something to keep an eye on. Uh, what do you think, guys? Is this helpful as we are walking through these trades? I mean, it seems that some of you believe so. If so, give us a like. But I also want to say that recently, I got an email yesterday that we are amongst the 15 best stock market podcasts for beginners. And this is according to FeedSpot, who rank us here as the number 4, the daily stock market news. Look at these nice mugshots. Mark, what do you think about this? I think we deserve it. Push higher. That's what I'm expecting, that we push a little bit higher, probably back towards where we opened, or right between today's open and yesterday's close, and then today, really big tech earnings kicking off. This is what I think will shake the markets. Tomorrow morning, with more news of what's happening in the markets and how we are trading it.
Happy trading, everybody.